Hey everyone, welcome in to another daily editorial here on the KE Report. We're going to be talking about continued, I think, positive developments in the resource equities, strategic partners continuing to enter exploration and more advanced exploration juniors, as well as M&A deals. We have 5 deals that we can talk about here. We are chatting with Dave Erfle, the founder and editor of the Junior Miner Junky. Dave, let's start out in terms of these M&A deals. We have Treasury metals and Blackwolf copper coming together. McEwan's offer to take over Timberline. We also have Contango taking over HighGold, SilverCorp taking over Adventus, and BHP, the mega deal here, bid to take over Anglo American. Look, BHP and Anglo, let's start there because that is a couple majors getting together. This is a mega deal, another mega deal for the sector, and a bit of diversification that we're seeing with BHP going into Anglo. Look, we don't know if this deal's even going to go through, but starting at the highest level here, what's your takeaway from this proposed takeover?
Yeah, that's great news. It brings a lot of attention to the sector, which is what we need, but it's pretty much stalled out as it's been spurned, and BHP's largest rivals are still kind of sitting on the sidelines to see what happens. And I think there was also a report that showed a price that it needs to surpass to make it a fair deal. So I think BHP is mulling making another raising their bid. So I'd like to see what comes out of that. The one deal that I really liked is one that you didn't mention, is the Reunion G Mining proposed merger. It makes a lot of sense, and that is a positive thing. I mean, the other deals that you announced were basically take unders and don't really excite me, but they are positive for the sector. But that Reunion G Mining deal, I think that there's going to be another bid coming in for Reunion, because that is a fantastic project, and that's a low price that G Mining is offering to take that over for. So I wouldn't be surprised to see another bid come in on that. And I wouldn't be surprised to see it being a Chinese bid, maybe at the last minute, like what happened with Asino.
Well, Dave, to your point, there's a lot of deals that really look like take unders. As we always have been talking about, it seems like for years, most of the transactions, with the exception of Osino that you just mentioned, have been take unders. But let's peel back the layer on this, because there's two sides of the equation. There's people that are invested in the companies that are making the acquisition and picking off these companies for pennies on the dollar. And then there's longtime shareholders in some of these companies that have seen their stock prices beat down. You know, if you look at something like the Adventus takeover by SilverCorp, or the Timberline takeover by McEwan, or even the Blackwolf copper and gold takeover by Treasury. I mean, these things have been beaten down for so long, but the company doing the acquiring is picking up good assets. Does that give you confidence that some of these, larger companies are doing the right kind of things at the right time in the cycle?
Absolutely, yes. If I'm a shareholder of one of these mid tiers, getting a take under deal, and it's really attractive and it makes sense for the company, I'm happy about it. But as far as my newsletter is concerned, I don't invest in mid tiers. I invest in juniors that are takeover targets. I was the victim of a take under myself late last year when Calibre took over Marathon, and recently my average cost was met finally, and I sold, and I rotated that money into a couple of late stage explorer developers that were much more attractive, that I think have higher upside, higher risk reward upside. When that does happen, when a take under does happen, panic and selling it and saying, "Oh, I lost money on this," is not really the strategy. You could either add more to it because you think it's a good deal for the other company and the share price will rise, or you just wait till your average cost is met if you believe that the gold price is going higher, like I do, and you wait to sell it then. I mean, this happened to me a couple of years ago also when Orla took over Gold Standard Ventures. I added to the position, and then it got to my average cost, sold it, and put it into something that had higher upside.
So, Dave, look, as much as we talk about these take unders, I truly believe that M&A is good in the sector. It
Absolutely.
consolidates companies, it frees up some capital, but it in a way can lock in losses for companies and for investors. A lot of these deals that I just went through on the onset there, these stocks, yes, they're being taken over at a premium to their current share price, but maybe they're getting back to levels they traded mid last year, and that's still way off of their highs. So do you take these M&As, even take unders? Are they good for the sector, or do they scare more investors away because they're locking in loss?
No, I think it's good for the sector because we've talked about this. These companies, there's only a certain amount of checks that these banks can write, and a lot of these companies they need to merge. A lot of these companies need to go away. There's just way too many juniors out there, and this is very good for the sector. But as far as having too many take unders, that can scare some people away from the market. But if you take a look at some of these stocks, and you can pretty much identify the companies that are about to be taken under or that will merge with other companies that make sense.
Well, Dave, I think it's fascinating to look at why are there mergers, why are there takeovers in the first place, and there's different reasons for different companies. Like I think something like Treasury and Blackwolf combining forces, it's to gain scale, something like that. So that's one angle. But something like SilverCorp and Adventus, it's to diversify jurisdictions, whereas Contango and HighGold is to consolidate jurisdictions. So maybe just speak to the kind of M&A deals we see and maybe the different motivations from the companies involved.
Yeah, you take a look at each one, and let's take a look at SilverCorp Adventus, right? SilverCorp was previously in a bidding war with Perseus for OreCorp. They went back and forth for several months, and Perseus ended up winning and taking over OreCorp, and SilverCorp just moved on and said, okay, what else can we take over? Oh, look, Ecuador is getting more favorable. The government is investing in a lot of these mining projects. So it probably makes sense for us to get it to take over a project in Ecuador. So let's go after Adventus, and that's what they did. But if I was an Adventus shareholder, if I was a long-term Adventus shareholder, I wouldn't be happy with it because I wouldn't want the Chinese risk associated with SilverCorp. And also, I'm holding the stock for a takeover at much higher prices. So it all depends on which boat you sit in when these take unders happen.
To that point, then, when these takeovers happen, okay, let's look at the follow-up company from it. The acquirer usually is doing okay, but they're bringing in a whole other project. What do you want to see the acquirer do then with this new asset? Because it's great to acquire pounds in the ground, ounces in the ground, but you need to do something with it.
Exactly. I mean, you need to either build upon what the previous company was doing. You add your expertise, you add your access to capital to fund the project, be as it may, or whatever the company was doing. You see what the takeover company brings to the table. As far as when I brought up the Calibre taking over my Marathon position, I didn't want the Nicaragua jurisdiction risk. I was hoping for a North American mid-tier company to take over that stock. And what happened was you had Calibre take it over, and it looks like they're trying to diversify away from Nicaragua because they started off with their Nicaraguan assets, and then they took over Fiore with dilution, mind you, and then with their stock price, and then they did the same thing with Marathon. So not only do you have the jurisdiction risk to deal with in Calibre, but now you have the bloated share structure, right? They've got almost 900 million shares out now, and you still got that Nicaraguan risk to deal with. It looks like they're having cost overruns at Valentine because they just announced a 115 million baht deal, which added more dilution. So I took a look at that, and I already told my subscribers, look, I don't want to have the jurisdictional risk in Nicaragua. So once this stock gets to my average cost, I'm going to sell it, and that's what I just did recently.
Well, Dave, just pushing back on that idea a little bit. When we talked to Ryan, because we have him on the show quite a bit from Caliber, their point was that when they bought the Nevada assets, they were starting to diversify in the U.S., but now they have 60% of their production profile in the North American realm, and their production profile is going up to that of a mid-tier. So while their share structure has gone up, Also, their production output, once Valentine Gold Mine is in production, will be going up, and they expect to get rated more like a mid-tier versus a junior. Is that a good strategy for any company to try to beef up not just their jurisdiction, spread it around, but also beef up their production profile to become a bigger entity that attracts more investors?
Absolutely. And I told my subscriber, I said, look, they're doing a great job of building a mid-tier company, but I just don't want the jurisdictional risk associated with Nicaragua. And also, I feel there's more upside in other developer explorers here. I mean, you're talking about a company now that has a market cap of what, about 1.4 billion, and 900 million shares out. In order for the stock to quadruple, once it's going to become like what, a $5 billion market cap company. I just see more upside in these other developer explorers that are either at the finance stage or close to the finance stage, and they're trading at 0.2 or 0.3 times NAV.
That's what I was going to ask you. So you're filtering down to these stocks that continue to be beat up, especially if you look at a long-term chart, more of that, again, pounds in the ground, ounces in the ground that are de-risked. I'm guessing past simply just inferred categories. That's where you're focusing right now. You see opportunities there?
Yes, absolutely. Yeah. I mean, I still do not see any reasoning behind taking unnecessary risk in early stage companies that are looking for something when, you go into these developer explorers that have de-risked up to a certain point. If they've got the access to capital, they've taken on a strategic partner, or more preferably partners. They've got that access to capital. They still have a pretty good share structure because they've managed the capital markets well. They're cashed up, and they're at the finance stage, or they're at the definitive feasibility stage. And like I said, they have that strategic partner, or they do have that access to capital, and they're trading at, like I said, 0.2 or 0.3 times NAV. Those stocks are a lot more attractive to me, because if you're looking at the gold price just consolidating here below 2,500, but between 23 and 2,500, and then going higher after that, which is what I see. I mean, you see the gold price, you see the silver price. Technically, they're acting very well. They had huge run-ups. They're consolidating those huge run-ups, and then once the consolidation is through, they're going to go up into their next leg. And that's what I see technically happening after major breakouts of the silver price at 26. It came back and tested 26 after going to 30, and the gold price ran up to almost 2,500. Now it's come back to test support at 2,300, maybe 2,250, where it's rising 50-day moving averages now, and then it's going to go higher after that. So I see that, and I see major mining companies seeing that. They're starting to do strategic private placements, and I see just a handful of these stocks still trading so cheap, like the gold price hasn't got a $2,100 floor, because I think it does, and it's acting like it does. And these mining companies are starting to see that. So if you're looking for companies, you're looking for stocks like this, that's what you look for. Either they have that strategic partner, or they're looking for that strategic partner. If they've got this serial successful management team that can attract a strategic partner, and they're looking for that, once the share price goes higher and they've got a project that has high margins at and they've used a base case of $1,800 gold or lower. That's a high margin project, and they've got all in sustaining costs at around $1,000 or $1,100 or even less. And that's an attractive project. It's multi-million ounces, and it's in a safe jurisdiction. It's got blue sky potential. That's what you're looking for.
Well, Dave, it will be nice to see some of these high value, high margin projects finally get re-rated higher and get more credit for their ounces in the ground, or if they're a copper company, their pounds in the ground. Let me just throw one more at you on M&A, though, since we've talked about a lot of these deals. There have been a lot of these mergers of equals deals, and these are ones that are hard to get your head wrapped around sometimes because you're not getting that big takeover premium, but companies are massing up in scale or finding synergies or trying to tie up a land. So I'd like to get your thoughts on that strategy, the merger of equals. We saw it first with Integra and Millennium Precious Metals merging to get a bigger scale and get more land and more ounces in the Great Basin. Now we've just seen that with Contango taking over HighGold, trying to lock up more. And for Contango, they were kind of in a situation where they have the partnership with Kinross, so they do have that strategic, but they don't have a lot to do other than work on their Lucky Shot project. So they needed something else. and acquiring HighGold gives them more mass, just like Integra needed something else, and by getting Millennial Precious Metals, they got those other projects, Wildcat and Mountain View. Do you like that strategy of a merger of equals where you have one in development and then the other ones have that exploration upside?
I do, yeah. I mean, it all depends on the projects if you're merging equals, right? If you're a merger of equals like you saw with Moneta and Nighthawk, these are just two projects that have huge capex, and you still don't see the access to capital. You just see two companies merging that both have the same problems. So that a merger of equal like that doesn't make sense, but the merger of equals that you just mentioned, those all made sense because they had synergies. And when you have a development project, and if you have even a project that is in an earlier stage development and a later stage development, and you have the access to capital, maybe you're having problems getting permitting on one, like what happened with I'm a shareholder of Revival Gold. They have the Bear Track Arnett project, which is not going to be fully permitted. The NEPA process, permitting process in Idaho takes a while. You have to have 3 years of studies done before you can get that permit. So the Bear Track project is going to take another few years to get permitted. So they went after Ensign, which is a private company that has a project that they can get permitted in a shorter timeline. And then they can get that built, and then they can use cash flow from that to build Bear Track eventually. So a merger like that makes sense.
So, Dave, as much as we're talking about here, metals prices doing well, gold well above 2,100 still, M&A happening in the sector, majors investing in companies. Why are we not seeing more precious metal stocks benefit, even the ones that have done the deals? I just pulled up that Integra chart. Integra's off its lows, but you pull up a longer term chart, it's not pretty. So why aren't more of these stocks doing better? Why isn't the sector doing better broadly?
Yeah, well, in Integra's case, it's they have the same problem. That they're just getting started with the NEPA process and in permitting their mine. It's going to take a few more years. So yeah, I mean, it all depends. You are seeing it, Corey, and in some of these stocks that are bifurcating higher, right? The investors see that the company has the access to capital and they have a credible permitting timeline. They see it's going to be shovel ready within a year or two. So they've started investing in the stock, and the stock has climbed higher. But we haven't had that aha moment where you've had the dart throwers move in the junior market where you could just pretty much throw a dart and the junior is going to go up. We haven't had that move yet, and I think the main reason for that is the stock market continues to go higher. Right, it shows signs of cracking, going lower, and then a positive economic report comes out, or the Fed says something and shorts get nervous and they start covering and the stock market goes up again. So I think the stock market really has to start going lower to get more risk, to get people more involved in the gold sector. We need to see more sector rotation, basically, because these high flying crypto assets and AI assets, they're priced to perfection, and they're way overvalued and way overpriced. And we have this undervalued and underpriced, junior sector waiting for investors to come into it. It's ripe for them to come in, but they haven't had a reason to come in yet. So I think that reason needs to take place, and that reason is the stock market rolling over and going lower.
All right. That sums it up. Well, I guess we're watching the U.S. markets then. Let's see if these markets roll over. And that very well could draw some more investors in. It's just interesting to see all this really positive news, I think, out of the sector, but not this broad-based recovery. Very much still a stock picker's market, as you said. Maybe that all changes here in the near term. Hopefully it does. But right now, I know a lot of these companies still looking for money and trying to figure out just what kind of work program draws investors in so that they can raise at higher levels. Dave, thank you as always for your time. Post a link to your website, the Junior Miner Junky, and we'll chat again next week. Have a great rest of your week, Dave.
You too, guys. Looking forward to it.